We were afraid this might happen. The PSEI closing the week below this support level. So what should we do in the coming weeks? Let's discuss some strategies. I'm Dennis Lim and welcome to another episode of Monday Market Outlook. We've been monitoring the weekly charts for the PSEI, and so far every time it hit these lows, it rejected it, but not this week. The PSEI closed the week at 6,393, right smack into our support zone here. A breakdown of this support level means that the market may be headed towards 6,256. So the problem with the markets right now is that it's a sleepy market. We have low volumes, and in this low volume trading environment, the price action tends to go towards the path of least resistance. And unfortunately, it seems that there's less resistance going down, right? So let's look at the daily charts. We can see that at 6,393, this is still quite a strong support level. We've seen the index bounce off of this level a few times. So is this level going to hold this week? Now, hopefully it does. However, given this weakness, we have to assume that any rally here may most likely be met with sell demand right here. So if you look at this critical zone here, this was support. So a rally here means that it might encounter this same critical level, but now it has become resistance, right? So let's delete this. And if it becomes resistance here, then it might go down, retest this, and head straight to 6,250, because we've already established a pattern here. You have your lower high, you have your lower low, you have your lower high, this is another lower low, and what may potentially happen is for us to form a lower high and then another lower low, right? Could be another here, and then this could potentially happen. So what should we do for this week? We could potentially look for some bargains when the index hits 6,250. One thing to take note is that this chart is the PSEI Index. Now, what the index means is basically a basket of securities. So this chart represents the movement of this particular basket of securities. So this chart does not necessarily represent all of the stocks in the Philippine Stock Exchange. It just represents the index stock. So we could potentially find some good opportunities from non-index stock. Let's look at our dark horse pick, Bloomberry. It's back in the driver's seat after bouncing off of its support level at 920. It formed a flag pattern and then broke out of that flag pattern. So remember that a strong candle like this followed by a flag pattern usually denotes a potential breakout of that flag pattern to the upside. Now, our target price for Bloomberry is around 12 pesos. Now, SSI is another stock we could consider. It, after giving a 10-cent dividend, it has bounced off nicely from the sell-off. Target price for SSI is around 282 and potentially 295. FCG is another good reopening play pick. It has formed a double bottom here and could potentially move towards our target price of 1 peso. Let's look at some news that affected the markets last week. A new tax bill is again being proposed. Would you believe that this cup noodle at 22 pesos will become 26 pesos? This Lucky Me noodle at 9 pesos will become 15 pesos, right? So the Department of Health and the Bureau of Finance has come up with a proposal to impose a tax on non-nutritional packaged foods amounting to 10 pesos per 100 grams or 10 pesos per 100 milliliters. So this cup noodle here is 40 grams. So that's a 4 peso increase. This is 55 grams. So it's a 550 peso increase. So which companies are making these snack foods, right? We have URC and Monde. URC is the company that makes famous snack foods like Chippy, Jack and Jill, Blend 45 coffee, C2 drinks, Vitasoy, and of course, cup noodles. Monde is the maker of the most popular packaged food here. Lucky me. So what happened here, if we look at URC's chart, URC had a massive 10% drop to 126, right smack in this second support level here at 126. Is this an opportunity to buy or should you sell? Let's look at the facts. Right now, this is still being proposed. It's not law yet. So is the market overreacting to this news? And every time the market overreacts to rumors, it could be a good potential to buy the dip. It doesn't make sense to impose tax on foods that are staple for low income and even middle class families. With inflation as high as it is right now, it's just gonna make things more difficult for a lot of people. Now they're arguing that we need to improve Filipino dietary habits. Are we also going to impose tax on salted fish in public markets? This could be a good opportunity to buy URC. The risk here is, what if this proposal passes? It could fundamentally affect the profitability of URC and Monde, and this could really spell trouble for both of these companies. So we'll see. As traders, we have to make informed decisions. So read up on this news, see where it goes in the coming days, and make your decision based on that. Now, for me, I would wait for more news. I would also wait for URC's chart to improve before I decide whether I want to buy this dip. Now, let's move on to the global markets. Last week, the S&P 500 continued its downward move from a peak of 4,445. So if we look at the extreme zones from the options market last week, the S&P 500 moved along this range and settled right here at maximum pain level. Remember, this blue line here represents the call wall, and this red line here represents the put wall, and this thin blue line here represents maximum pain. There's a concept in trading called reversion to the mean, right? So what this basically means is that when price action goes too far away from the moving averages, it tends to revert to the mean. So if you look at how the S&P 500 moved away from these moving averages, it consolidated until it reverted back to the mean, right? So at this point in the S&P 500, right, it was too far away from the moving averages, and we are now seeing a move towards a mean reversion, right? Let's look at the options markets for next week. We see here a call wall at 430 and a significant call wall at 440. So there are a lot of traders still betting for the market to go bullish. But we also have a big put wall here at 415 and one here at 421 and 420, right? So maximum pain is 418. The reason why we're looking at this is that 68% of the time, the S&P 500 will move in between the extreme zones, right? So if we plot these extreme zones in the S&P 500, we have 430. So let's go down to 430. We have 415. And max pain is at around 420. So the S&P 500 could move again within this range, reverting back to the mean. Now, this is a significant support zone, so we could see the S&P 500 settle down in the support zone and consolidate in that area. So let's look at other indicators that may give us additional clues on where the S&P 500 may be headed in the coming weeks. Now, this is the equity risk premium chart from Morgan Stanley, and what it basically says is that equity risk premiums is at a 20-year low. Look at the level here, and it is the same level back where it was before the housing bubble, right? Now, equity risk premium basically compares the attractiveness of equities vis-a-vis risk-free assets. Now, what are risk-free assets? We have treasuries and cash. They don't have any risk, right? But investing in equities has its risk, which is why there has to be a premium to equities to make it worthwhile for investors to take a risk in these assets. But as it stands right now, that premium, that risk premium, is at very unattractive levels. Which explains why, if we go back to our smart money and dumb money chart, which we haven't been featuring a lot lately, let's look at the disparity here. Institutional money, smart money, has been exiting the market aggressively, while the current S&P 500 rally here is mainly driven by dumb money. Last time we were at these extremes, dumb money, smart money here. This is the same pattern. Dumb money, smart money here. Peak, it went down. Have we peaked here? And is this a sign of things to come? So let's continue to monitor the markets. I hope you found this episode useful. Please like this video, subscribe to the channel, and of course, good luck on your trades. Manage your risks accordingly, and I'll see you again next week.